How are you? I'm just looking at the numbers, when you get onto the Zoom room, and I know the webinar is starting because it shows me that, okay, the webinar is starting. Then I start seeing people coming in. So I'm just watching the number and to see how many of you join me today. And it is a 3 p.m. in the afternoon on Saturday, folks. And there was a couple of people on the Saturday 3 p.m. all the time. And I actually was amazed how they are always on my webinar. And one of them I finally got a hold of. And I realized that, and he actually works at a CPA firm and in New York area. So he actually uses my webinar as a tool for him to gain knowledges when he works at his office. And he also tell me that during the pandemic time, and he'll listen to my webinar, and then he'll go back to his partner and tell them this is what needs to be done. So he actually got pretty good record with the company because of the way how he searched for knowledge. It was really interesting to hear. So I appreciate you're here. And at the same time, and let's tackle this topic, and we get people calling us on this all the time. I know right now cryptocurrency is not hot. People are not buying it, they're not selling it, they're watching all these bankruptcy going on. It's a little bit of nerve-wracking. So nobody really does too much about it. Maybe some brave ones start buying in and they consider it's a good time to buy. But in 2022, it was hot, right? In 2022, there's a lot of people tapped into cryptocurrency and it did a purchase one way or another, or traded, or did all kind of things. And now it is a tax filing time. So we have people goes, what do I do? I'm not getting anything, Ying. Do I supposed to just put in whatever I want? Of course not. So today, let's talk about what you would do about your cryptocurrency deals and your tradings, and for 2022 tax return. See, I focus on 2022 because even though we're in 2023, you may have questions related to today's market and cryptocurrency. No, this webinar, it is focused on 2022. So what I will do is now I will start sharing screen with you. And I always start my webinar by introducing two things we have in the system. Number one is our website. And our website is a very useful tool. You literally can find people's schedule. You can come into appointment, and then you can find appointment with people. And we are slowly uploading staff information on here. So you can meet with me by clicking me, and you can meet with Dr. Hao and all the other partners, and also the senior staff whom can really answer your question. So you can make appointment with them. And obviously this is a paid business consultation avenue. And you come over here, you pay online, and then we will come into the Zoom room and specifically answer your question. Obviously, if you're our client, you can have our client portal, which means that on your cell phone, you know that your taxes is done, and you know that your past year's copy. And if you're doing payroll with us, you'll get your payroll information for your employee. And if you are doing accounting with us, you will get your financial statement periodically from us loaded onto your portal. So it is a really place for you to know everything we have done for you as a final product. We don't put in our work in progress there, but we give you the final product that we did for you. And the other website that is equally important is YouTube channel. Hey, we're really big with YouTube. And this webinar, I am about to talk about crypto reporting. This is the title of this webinar, and it's going to be here. And we make complex ideas, we make complex knowledge simple. That is really our trademark. And granted, English is my second language, right? You want me to talk like Harvard graduate? No way. I don't know how to speak that kind of language, but I do have ability to shrink all of these knowledges in a very simple and a plain thought process. And I don't have a word for that ability, but the comments from our client is that, man, you explain things so easy. I got it. So I got it is our trademark because you will get it. And you will say, I got it after you hear our webinars and read, going through our videos. So you can check our videos here, folks. And we are almost reaching 4,000 subscribers. So I want you to forward our videos that you like to your friend and help us grow this community. The bigger of this community, the more I got it. And the more I got it, the better we can do business, the better we become. And in this world, in United States of America, knowledge is power. The more you know, the better you will have it. All right. So let's make sure we spread the knowledge and you help us to plant the seed so other people can see one video from us, then become a subscriber of our channel. And Community CPA is our channel for YouTube. All right. Now let's begin our webinar content with cryptocurrency reporting. Introducing myself, I saw a couple of you are new. This is the first time you come to my channel. You might be really heavy with crypto. That's why you come on. And my name is Ying Sa. I am the CEO of Community CPA and also the managing partner. I have one book on internet right now. It's called Appointment with Ying at 8 a.m. And this is a book filled with stories of our clients and mine. Okay, of course, I don't disclose clients' real identity, but they are all real stories. And the story of how people starting up their business. So it is a story filled knowledge and not dry, very interesting. You're going to remember those characters I have in the book because I am writing the next book right now. It is scheduled to be published this March of 2023. All right. So this is the slide I'm showing you. This is the new book that is coming soon. Will be published in March of this year. You can find them on Amazon, or you can just call our office to get a copy from our office. All right. So of course, with all of our webinars, we do not take responsibilities for how you apply our knowledge. And you want to take it with a grain of salt. That is a phrase I put in there because English is my second language, right? So I always fascinated with how the meanings are interpreted in the English language because I think it is so much of a cooking culture in America, maybe as much as in China, which I don't know because I was too young to care about cooking. But here I realized a lot of expressions are kind of related to cooking. So in my 10 a.m. book, I actually used quite a few cooking examples to illustrate the tax structure. So it will be rather interesting when you read my book because it is all daily, ordinary things, but how I interpret that into the deep knowledge of how you would understand taxes. All right, so take that with a grain of salt. And if you really need to rely on our words or work result to do anything, obviously engage Community CPA so we can provide that professional service to you. All right, so no matter who you are, no matter what you do, and you only have two ways to invest in cryptocurrency. Only two ways. You either invest as part of your business or you invest under your personal name as an investment. Am I right? Think of what you'd have done. You probably wrote a personal check, bought cryptocurrency, then that's your personal investment. But maybe your company had a great year in 2022, and one of your CFO or your CFO, we only just have one CFO. Hopefully you just have one, or a fractional CFO, which can be us. And maybe you got recommendation from someone tells you that let's put our money in cryptocurrency like Elon Musk did for Tesla. So that will become your asset, your intangible asset on your company's book. Because it is an intangible asset on your company book. So there is a tax implementation that is different from personal. And that is a impairment testing. I will explain that throughout this webinar and to again come back to the concept. If you have that under company book, it is treated as an asset. But if you bought it under your personal check, in your personal name, then cryptocurrency is not treated the same way as how you bought it in business. So it will be treated like capital gain and a capital loss. However, it is not treated as stock. Just keep what I said right here in mind. We're gonna come to explain the difference. So mark to market does not apply to crypto investment. Make sense? So when you have crypto investment, you heard your friend saying that, oh, you better do mark to market election, otherwise blah, 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 otherwise all kind of things can happen and you can only deduct $3,000 losses, but that is not the case. And the cryptocurrency is a personal investment. Mark to market does not apply to cryptocurrency because it is already accounted as a mark to market. But the result, when I say mark to market, when you make your stock mark to market, you actually make them a regular gain and a regular loss, right? So they don't subject to the $3,000 limitations, but cryptocurrency is not like that. Cryptocurrency, it is capital gain, capital loss. So they will never become ordinary gain, ordinary loss. But they don't need you to do mark to market to eliminate the wash sale. I will go in more details on that. Just follow me. Stay close to me. So this is how, when you are dealing with cryptocurrency on your 1040, this is where you need to check the box. You check the box, say yes. I kind of marked it for you, and it's a digital asset. Say at any time during 2022. Did you receive or sale? You say yes, right? Did you think that if you bought it in 2021, but you didn't do anything, you didn't sell, you didn't trade, you didn't do anything. So you didn't have the activity in 2022 because you had cryptocurrency, but you did not do the following things, right? Then you don't check yes, you check no. So this is the activity IRS is capturing for you. Did you deal with cryptocurrency? Okay, be really careful with this sentence, with this checkbox. Cryptocurrency is company asset. So when we talk about company, what do we normally talk about? As a small business owners, we are partnership, we are S Corp, we're C Corp, right? Sometimes you are even nonprofit, right? And it is reported on balance sheet to IRS. And the gain and loss are recognized as capital gain and loss. And in 1065 and 1120S, those pass through entities, and it will come through K1 being recognized as a capital gain or loss. So you see how that was a company asset. Gain and loss is recognized on the K1 for the pass-through entities. That's a partnership 1120S. But for C Corp, it is recognized as capital gain and loss as well, but the tax is the same as the income tax rate. It's one rate, right? But in the pass-through entity, because it's passed through to where? To 1040. In 1040, your capital gain and capital loss and your income and loss are not taxed the same. Am I right? Right. So your capital gain rate is different from your income tax rate when your capital gain is long-term. But if it is a short term, it is the same. So see, that's a little bit of complexity right there. But all I need you to understand is if it is a company asset, it belongs to the company. So you calculate gain and loss on the company tax return first. Then if it is passed through, it goes to your 1040. All right. So let's talk about 2021 infrastructure bill, the famous Inflation Act, right? So in that bill, it says that the brokerage company like Robinhood, TD Ameritrade, those companies, and by February the 15th of every year should send out the summary from the brokerage firm to the taxpayer. And it is not currently required for crypto trading, that you probably realize. Because if you trade at TD America, you get the 1099B, didn't you? And you got that, and you sometimes they're pages. I have a client, it was a 790 pages of 1099B. So those trading are documented that way, and some of those 790 pages went to IRS. So IRS has a record of that. So IRS want brokerage firm to send that statement, but for crypto platforms, they are not currently required. Okay, and so in the act, it says that starting from January the 1st, 2023, and they require those crypto company, brokerage company, to report to IRS and in the format of 1099B. So basically, you will get that for your cryptocurrency starting from January the 1st, 2023. But there's a little bit of pushback right now because this came out in November of last year. Then they kind of, in one of my webinar, I even told everybody that, hey, you better watch your cryptocurrency reporting because the end of the year balance for 2022 need to agree with what's happening in 2023, because 2023, you're going to get 1099B. So you really need to do due diligence for 2022 so your 2023 can be right. With that, I said, because the requirement is coming out for January the 1st, 2023, but right now, looks like that is getting delayed. So I don't know when yet, but let's say the spirit of IRS is wanting cryptocurrency to be reported just like the other stocks and come up with a statement to them. And so with that said, and IRS would have to wait until that process complete in order to announce when that would start. Not to say that nobody is doing that already. Their brokerage firm already working on getting 1099B. We already have clients who trade on cryptocurrency received the statement. Okay, so the company can choose, the brokerage firms can choose to early adopt. So that is a government requirement in Horizon, but they can do early adopt, which is totally fine and legal, and you will get the report. So going back to what I said, you really want to make sure that you reconcile your 2022 and match to the beginning balance of what 2023 says on your report. So this was more like what I was saying. You won't get it in most of the cases for cryptocurrency reporting, but you may have already gotten it because the brokerage firm is early adopt the requirement. And the notice, and you notice that when you receive the statement, you will be fascinated because you will never be getting something called a wash sale loss column. It's not there. And remember, the IRS doesn't consider the cryptocurrency transaction is same as a stock transaction. They don't see it that way. They see stocks, security is one group. Okay, so wash sale rule applies to that group. But cryptocurrency is actually an asset, even though it is an intangible asset, digital asset, but it is an asset just like your table and chairs. So they do not have wash sale rules. And you may kind of wondering, like, what do you mean by wash sale rules? I have a slide in the back to explain that to you. Let's just follow my thought. So the federal income tax treatment for crypto, and I want to emphasize on that again. It's a virtual currency, right? It's treated as a property, like table and chairs. And it is really not a currency. It is a virtual asset. It is a imaginary thing that you can give a pretty digital picture of a coin, but it is not. It is a bunch of computer programming codes, but they give a value. It's called a virtual currency. Of course, there's a science behind it, but the science to me is so messed up. That's why so many of them are claiming bankruptcy. And that's really a way, I do have a taxpayer and was investing about 100,000 in cryptocurrency. And he actually had a conference call, Zoom meeting with me because we're managing their financials and, asking my input for cryptocurrency. And, I'm an accountant, really, not a financial planner. And I have a lot to against some of the thinking, the thinking that financial planners industry have. I don't project things to someone's, 60 years old when they're in their 20s, because things can change so much. I don't believe 8% of interest would carry all the way to their 60s. So for that reason, I don't plan things for that long. But when he come to me, ask for whether I should buy cryptocurrency or not, and I said that I didn't because it was not regulated to the point that as accountant, I feel comfortable. So, but there's always opportunity to make a lot of money when you dabble into something that regulatorily approved yet, or not being framed around too much yet, right? So we call them pioneers, right? So you might be one of those pioneers, makes millions of dollars because of the cryptocurrency trading. I do have one client. I don't have many. I just have one client made in 1 year, made $2.5 million on cryptocurrency gain. Okay, so with that said, I don't know. I'm not a opportunist because I never win any lotteries in my life, and every time I try something, I never win. So I don't believe on a sort of a fell out of sky kind of luck. So I just believe that I work and then I make the money. So if you're in the same boat, same mentality, same life experience like myself, cryptocurrency is not yet my cup of tea. But to understand that the cryptocurrency is something that you invest, you might make money. Oh yeah, people make money. I even have one client made $2.5 million in 1 year. Okay, so that's not fake, that's real. And we do their taxes, so we see it and it makes money. But it is a property, it is not a stock. And that property can completely be lost, and you will, can evaporate just like smoke. A lot of people did see their money going up on smoke, right? And then the IRS code 1222 said that if the property was held primarily for sales to customers in ordinary course of trade business, then it is not capital asset. So what they're saying is that if you are the person and trading your cryptocurrency day in, day out, and day in, day out, like how you do it as a day trader, and you can prove that this is your business and your primary purpose is profit making, then yeah, your cryptocurrency can be coming out of your capital gain and loss and becoming income and ordinary income and ordinary loss. That's possible. Okay, and in this case, that's the IRS code. So you can tell that the IRS has two side of views for cryptocurrency. You can treat that as the investment, then it's your property. And you can treat that as your business if you're really making it your business. You have to have enough trading record and then make it your business, become your business, right? So it cannot be periodically trading and then calling it a business. Then you probably say, okay, Ying, why would that make any difference? The why is if you have a capital loss, you can only deduct $3,000 a year.
But if you have a business loss, what happens? That offset all of your W-2, you got all your refund back, right? So big difference, whether it is a business loss or capital loss. But what if it is capital gain? Capital gain long term is even better than regular income. So why would you want to make it a regular income? So these are the things really deserve a good consultation with the professionals. So you know in your situation what is the best way to proceed. All right. So that is the tax treatment on the crypto. It is so much not just for the crypto, it's also for properties and asset versus a regular ordinary business differences in terms of gain and the loss, right? And cryptocurrency gain and loss when sales proceed is greater than basis. So what is basis? Basis is your purchase price. When you sold it more than your purchase price, you have capital gain, right? So when your sales is less than your base, then you have a loss, capital loss. Very simple. So from the gain and loss side, you have a short-term gain and the long-term gain. You know, if it is short-term, it's hold less than a year. If it's long-term, it holds more than a year. And the capital gain long-term is a good deal. And you pay the maximum 21% of taxes. When you pay, 20% of taxes. When you pay 20% of capital gain, and your income tax is probably at 39.5%. So that is where the difference is much more advantage for you to have that as a long-term capital gain than the short-term. Short-term is taxed on the income tax rate, so it's the same as your regular income. Now, cryptocurrency, short-term, an example, Zhang has a W-2 income of 70,000 and the short-term capital gain of 10,000. Okay, that is from the Bitcoin transaction. And then he checked the page one, say yes to digital asset, right? Because he actually sold it. So he got the short-term capital gain. So he had a transaction. And he filled in Schedule D. Schedule D is the form in your 1040 where you put in your basis and you put in your purchase price. They will tell you, calculating the difference for you. So you will pay your current tax bracket, tax rate on the short-term gain. So let's say, pretend it is 22%. Then Zhang has to pay capital gain of 10,000 times 22%, which is $2,200 tax, right? So that's an example of short-term. For long-term, same example. If it is a long-term gain, then it would be 15% of rate. So the tax rate is 1,500. You see how that shows up as more advantage than treating that as a short-term gain or even regular income, right? And cryptocurrency short-term, long-term tips, hold this as long as you can, turn that into long-term, right? And, sell it when you have a lower income, because when you have a lower income in that year and you add on top of your capital gain, your long-term capital gain could even be 0%. So just remember, I always, in the kitchen, inside of the kitchen concept, capital gain and the loss, and I consider that like oil. And your income and loss is regular income and loss like water. When you pour oil into the water, they what? They stay on top, right? So the capital gain and losses rate always coming on top of what your income is. So the lower of the income and your long-term capital loss could even end up to be zero. So that is why we are saying here, sell it on your low income year, if you have control over this, right? So much of our life is sort of, we got here, no choice. But if that is always your situation, I will give that burden to the universe. Why would you even worry? If it has come to you, you deal with it. As long as you did it right on your tax return, the government okays with your claim, then you're good. The rest of it, whether the market is gonna be in your benefit or not, just let the universe does its thing. So I always believe everyone's reward and everyone's hardship are actually equal in life. So it's just a different timing when we meet different people. And for us, when we are in different life stage, it just be different. Just take it with a peace of mind. Why struggle, right? If you cannot predict the market. And I would not believe any of the people can predict the market unless they have inside information, which there are people have it, right? So IRS position. Company can take worthless security deduction via impairment testing. This is such a simple sentence, but yet so vague. For a lot of small business owners, if I talk just like that, they will be like leaving me. So no, my Chinglish is different. I'm telling you, this is what that means. So if you have a loss in your cryptocurrency and you bought the currency in your company and you put the currency purchase on the other asset on your balance sheet already, and in year 2022, it become $1 instead of $100,000. As long as you know it is $1 on December 31st, 2022, and you can write down that $99,999 in your income statement. It is called impairment testing and impairment deduction. So you test it, making sure the value is right. It is $1, not $2, not $10. It is $1. You test it, which is the statement that you're getting from your brokerage firm. And then you know how much you bought for it, so you can calculate your loss. But that is not capital loss. That is impairment write down. That is your asset write down. It is almost equal to your inventory, right? You bought an inventory. Let's say you have a Christmas ornaments, a Christmas novelty store, okay? And you know, they're time sensitive. Christmas, you bought it, didn't sell. And how much value you have for that again in January? Probably none. Next year, it'll become something different. So what you do is your inventory you bought for $100,000, you didn't sell it, and it's worth nothing now because Christmas is over. And you write down that value. And what is that? That is write down of inventory value, right? And that is allowed deduction. As long as you have a business case to make that justification, it's called impairment testing. And that is what you are doing. You are deducting the inventory into write-off in your income statement. So if you made $100,000 net profit, with that deduction, you actually made no money. So that's what that is. So same thing, your cryptocurrency, it is like your inventory. The value could diminish, but even if it is diminished, it still have a value. So they stay on your book and then you write off the difference. But for individual, you cannot take that worthless security deduction. You can't. And you can only write off when you sell it. Say you had a cryptocurrency from $100 now worth of a penny. You cannot deduct that difference unless you sold it. You're going to carry it. You don't sell it, that's fine. Stay on your book, right? But if you sold it on December 31st, 2022, then you can deduct that $100, $99, right? You sold it, $100 because you will sell it for $0 or $4, you deduct 99 loss, right? So that is what they say that cannot take worthless security deduction. Worthless just means it's not worth anything, but it's still on the balance sheet. But if you sold it, you can. So individual and company are treating it so different. The company, you don't have to sell it. You're just evaluating it and then you write off. But individual, you cannot evaluate it and then write off. Okay, if you donate crypto to nonprofit, it's okay too. But if it is over $5,000, just like the regular donations requirement, you would have that appraised. So normally, normally you can appraise that with your cryptocurrency statement, knowing how much of value that is on the date you donate, and that would be a good way to prove the value. And with IRS language, it says require a qualified appraisal. And there's no details about what do you mean by qualified appraisal. So what I mean by qualified appraisal, my interpretation could be right, could be wrong, is your trading record. It is the value on that day. And the IRS sees crypto is not a stock and a security. So for that reason, you do not see wash sales. Wash sales only existed when you trade stock and security. So there is a case you can look into. And IRS also decided that the options are not stock and security. So they are actually belongs to like cryptocurrency, and you don't see wash sales and loss. They are straightforward. You buy, you sell, you buy, you sell. Gain and loss is calculated like mark-to-market electors for stock trading, day traders. All right, I promise you to talk about wash sale rules. Okay, so first of all, what is wash sale? And there is an example down here would really help you to understand. So let's just go through this example. You bought a stock, $150 stock in January 2022. Okay, 6 months later, you sold it, and you sold it at a loss for $10. So that because you sold it within a year, so it is a short-term loss. Okay, and you purchase it back like next day. So that $10 you purchase back with 150 shares. So you know how you had this $10 loss already when you sold it, but because you purchased back so fast within 30 days, so the losses you had when you sold the stock, that $10 loss left your capital loss column, came over to wash sale column. It's a disallowed loss. All right. So this is what I want to give you a definition of wash sale. So wash sale basically is saying that we don't want you to claim the loss right now. You bought it back too fast, and we will put that in the wash sale, but giving you that $10 you lost into the basis of your stock. So you bought it for $150, but you know what is your real base right now? Is 160. You bought it for 150, but you got $10 loss that you were not granted. So not IRS, the brokerage firm has this system. They know to add the $10 back for you. So your A stock on June 16, 2022, the basis is 160. So let's say you sold it for 160. Do you have capital gain? You have capital loss? No, you don't have any gain and loss. It's an even deal. So that is wash sale. Dispose of a stock or security for a loss and then reacquire the same stock back within 30 days. The IRS rules make the brokerage firm to program their system to not allow you to deduct that $10 loss. They just add it back to your base. But you didn't really lose it, right, folks? You didn't lose it. They're just delaying you to claim that loss. Okay, let's look at losses. So on November 1st, 2021, I bought one Bitcoin for 65,000. Then I filed 2021 1040 and check the box, but no Schedule D reporting because you didn't have transaction, right? And you just bought, you bought the Bitcoin, you had the transaction, so you check the box, you have the transaction. but you also didn't sell, so there's no activities on Schedule D, so you don't need to report Schedule D. Now, on February 23rd, 2022, which is the next year, and you sell your Bitcoin for 22,000 loss. So that's a short-term capital loss because it's less than 1 year. From November 2021 to February 2022, we only talk about 3 months. So it's a short-term capital loss. Whether it is short-term or it is long-term, folks remember that loss only can offset capital gain. If it is come out for deduction, it is only allowed 3,000. Remember that, right? So the next day, you bought 1 Bitcoin back for 22K. Remember, in the eyes of IRS, crypto is not a stock security, so wash sale rule doesn't apply. So even though you bought it back next day, you still can claim the 43,000 short-term capital loss. Conclusion on December 31st, 2022, folks. You owned 1 Bitcoin for 2022K because you bought that on February the 24th, 2022. And you check the box, and on your 2022 tax return, on Schedule D, you report the base 65,000 because you bought that for 65,000 back in 2021. You sold for 2022. So that is a short-term capital loss for 43K. You owned 1, so at the end of the day, you own 1 Bitcoin, you have a 43,000 short-term capital loss, and to offset other gains or take 3,000 loss in 2022. So that is our overall look with your cryptocurrency. And I go back to this one last slide because we're talking about 2022. And in 2022, if you have cryptocurrency activities, so you check the box, you use Schedule D. And when you use Schedule D, and you know that belongs to capital gain and capital loss. If you got a gain, if it is a long term, and you enjoy lower rate, but if it is a short-term gain, and you sold it within a year, it doesn't really matter. It's going to be taxed the same as your regular tax rate, okay? And then with the capital loss though, if you had a loss and you have only the $3,000 to deduct in your 2022, because the IRS don't allow you to deduct more capital loss than $3,000. Then you may wonder, well, man, if we lose $3 million, I would have to live to 1,000 years old. Otherwise, I cannot finish my deduction. In the way it is right, if you don't have any activity from now till your 1,000 years old birthday. So normally what happened is you had loss, then later on you would have gain, and then your gain and loss would offset already. So you really don't take forever to reduce the 3,000 by 3,000 every year. You do have the activities can offset that. For example, if you have a rental property you sold for a gain, that gain would offset this loss. So there's other activities in your life can help you to use up the capital loss. I would always say that in tax world, loss is not loss, right? Loss is deferred saving. Just hear me. Losses are deferred saving. If you utilize them properly, they will save you taxes in the future. And in some years, can even save your taxes to the past years, getting the money back. But right now, for 2022, it saves your taxes in the future. All right. I hope you had learned 1 or 2 new things from our webinar. And remember, all of our webinars are going on to the YouTube channel after the session. If you missed today, no big deal. You can go to our YouTube channel. Our YouTube channel name is Community CPA, one word with no plurals, just Community CPA. You type in, you will see us there. And I hope you enjoyed our webinar, and I will see you again and again. We have never stopped. At 3 p.m. Saturday is our time to share what we know. Bye-bye.